Bull Bear Buzz Podcast for decoding markets, fueling minds.
Welcome back. Today we're doing a deep dive into the Indian stock market, specifically looking at Monday, June 2nd, 2025, based on the sources we have.
Yep.
Our goal is really to unpack what happened, what drove the changes on that particular day, cut through the noise.
And the first thing that jumps out from the data is, well, a pretty significant dip in the main indices. That was the headline.
A dip. How big are we talking?
Quite significant. The BSE Sensex, it dropped over 750 points, and the Nifty fell below 24,550. So, yeah, noticeable.
Okay, over 750 points. That's substantial. So what were the sources saying was behind this? What were the main drivers?
Well, the information points largely outside India, actually. There were renewed concerns about potential U.S. tariffs on steel and aluminum.
The Trump tariff threats resurfacing.
Exactly. That kind of talk tends to make global markets jittery, India included.
Right.
Plus, you had ongoing worries about, rising COVID cases in some places and just general geopolitical tensions simmering.
Right, sort of a mix of global anxieties then.
Pretty much. It created a mood of caution among investors.
And you could actually see that caution reflected in the market's own fear gauge, couldn't you?
Absolutely. The India VIX, which measures expected volatility, it surged. We're talking over 10%.
Wow. So nervousness definitely spiked.
That kind of jump really signals increased uncertainty. Yeah. Investors bracing for potentially bigger swings.
Yeah, but here's where it gets interesting based on the sources, right? While the big indices were down, it wasn't like the whole market falling together.
That's a really key point from the day's data. There was a divergence.
Okay, tell us about that.
Well, you had sectors like IT, which are often sensitive to global sentiment, taking a hit. The Nifty IT index was down over 1%. Names like Infosys, TCS, they contributed to that drop.
Okay, so IT down. But what about the other side?
The contrast was the Nifty FMCG index, fast-moving consumer goods. That sector actually traded positively.
Really? Like what kind of companies?
The sources mentioned Godrej Consumer gaining about 5%, and Britannia was up around 3%.
So the defensive plays held up. People still need their essentials, I guess.
Exactly. FMCG is often seen that way when the broader outlook feels a bit shaky. It shows how different parts of the market react differently to the same sort of macro news.
That sector split is fascinating. And drilling down even further, there's specific company news making waves too, wasn't there, despite the overall market dip?
Yes, definitely. We saw a mix of things. For instance, the Leela Hotels IPO, Schloss Bangalore, had its debut.
How did that go?
A bit muted, actually. It opened at a discount, about 6.55% below its IPO price on the BSE. Maybe had the best day for a new listing, given the sentiment.
Right. Tough timing, maybe. Any positive company stories?
Oh, yes. Apollo Hospitals was highlighted. Their shares were in focus because they reported really strong Q4 results for the 25 fiscal year. Yeah. Net profit up 53.5% year-on-year. Beat expectations.
Okay, so strong fundamentals getting rewarded there. Anything else notable?
Yeah, a couple more. Vodafone Idea reported its Q4 FY25 results. Now, it's still a consolidated net loss, about 7,166 crore.
Okay, still a loss.
But the sources pointed out it was actually a 6.6% improvement compared to the loss the year before. So that nuance caught some attention.
Got it. So less bad than before.
Kind of. And then there was Nykaa, FSN E-Commerce Ventures. They reported a massive surge in profit. 193% year-on-year jump in their Q4 FY25 consolidated profit after tax, reaching 20 crore.
Wow, 193%. That's huge. So individual performance really cut through the gloom for some.
Definitely. These company stories often reflect specific operational strength, right? More than just the day's global worries.
So pulling it all together, the sources paint this picture of global fears causing a broad market slide.
Right, triggered by those tariff concerns mainly.
But underneath that, you had specific sectors like FMCG holding up and individual companies like Apollo and Nykaa posting really strong news.
Exactly. And we also saw other economic bits playing out. The sources mentioned, for example, significant block trade activity by foreign investors in May, like $5.5 billion worth.
So big money was still moving around, even with recent outflows.
Yeah, suggests not everyone was heading for the exit. And commodities reacted too. Gold edged up, the typical safe haven move. Oil prices actually rebounded a bit after OPEC plus confirmed output plans.
And the rupee.
It actually strengthened slightly against the U.S. dollar, appreciating 6 pays to 85.49. So not everything moved in lockstep with the equity dip.
Okay, so for you, the listener, what's the takeaway from the snapshot of June 2nd? It seems to show how, yes, global events, politics, health scares can hit your investments.
Definitely, they have a direct impact.
But it also really highlights that it's not the whole story, right? Sector trends matter, company performance matters. They can push back against the broader tide. It was a complex day, not just market down.
It really illustrates that complexity. It's rarely just one thing driving the market. It's this mix of global factors, sector dynamics, company specifics, all interacting.
A day that shows significant dips driven by global fears, for sure, but also pockets of resilience and strong performance. It's a mosaic. So the final thought for you to consider, given this kind of mix described in the sources, global pressures, but also specific successes, how might investors navigate this kind of volatility? Where might the focus shift?
And just before we wrap up, please remember, the information provided is for educational purposes only and not financial advice. We are not SEBI-registered advisors. Investing in stocks carries risks, including potential loss. Consult a SEBI-registered advisor before deciding. We're not liable for any losses from decisions based on this information. For more unbiased update, please subscribe to Bull Bear Buzz Podcast.